Assalamu alaikum. Today we have 3 halal stocks that I've been watching closely. 2 of these halal stocks are stocks that I may be adding to my portfolio very soon. Alright, now without further ado, let's get started with my list. The first stock on my list of 3 halal stocks is Dropbox, ticker symbol DBX. Dropbox is a file hosting service that offers cloud storage. It allows you to keep your files securely stored, up to date, and accessible from any device. It is somewhat unique from other cloud hosting services in the variety of apps for which it has ready integrations. And it currently boasts over 600 million users. Dropbox uses a freemium business model where users are offered a free account with a set storage size, and then with paid subscriptions, you get more capacity and additional features. Now let's talk about how the company is doing financially by looking at the third quarter 2020 results. Net income was around 32 million compared to a loss of 17 million for the same period last year. Net cash provided by operating activities was around 200 million. And in addition, it has a reserve of close to $1.2 billion in cash and cash equivalents. So as far as balance sheets go, Dropbox has an A+ balance sheet, which gives me confidence that Dropbox isn't going out of business anytime soon. Now, obviously, no one knows the future. Ya'juj and Ma'juj could start popping out from China tomorrow, and the entire world could go to hell in a handbasket, at which point all bets are off, and Dropbox isn't as secure as I thought it was. But at the same time, if that were to happen, Dropbox would be the least of my worries. So absent an event like that, I think Dropbox is rather secure where it is financially. As for the halalness of its financials, if you look at interest expense and you compare it to total expense, it's less than 1%. Interest income compared to total revenue, it's less than 1% as well for Dropbox. So there's very little use of interest in Dropbox's operations. However, I'm not looking for survivors when I invest. As the viewers of my channel know, my target rate of return is around 30% annually. And this is really where Dropbox falls short for me. You see, Dropbox is losing ground to competition. It saw only a 16% year-over-year revenue increase in Q2 of 2020, and a 17% year-over-year increase in the first half of 2020. Now, by comparison, Google Cloud's revenue increased 43% year-over-year in the second quarter of 2020, and Microsoft grew its commercial cloud revenue by 39% year-over-year over the same period. So this means that Dropbox is losing market share in the cloud storage business, and frankly, I don't see this trend reversing anytime soon. It's very hard for Dropbox to compete with other cloud service providers because the big guys are bundling this cloud storage service with a lot of other services that a lot of customers find essential, and so it makes sense for them to go with the bundled cloud storage service that they're getting, as opposed to using this sort of one-off by itself Dropbox service. And keep in mind, when I'm saying other cloud storage providers, I'm talking about companies like Microsoft and Apple and Amazon and Google. So really big players that have a lot of other services that they can bundle with their cloud storage services. So really, as far as Dropbox is concerned, the path towards a successful investment in this stock would be if Dropbox were to get acquired by a larger company. And there is in fact already acquisition rumors out there, and I wouldn't be surprised at the least if one of these rumors were to materialize. I think it makes a ton of sense for some of these larger tech companies to scoop up Dropbox and bundle it as a service with a bunch of other services that they provide. Exactly like what happened with Slack and Salesforce, you'll recall, a few weeks back. And frankly, I think the reason why Dropbox is currently trading at a PE of 119 now, despite its growth numbers not going in the right direction, is because people are speculating that an acquisition is near. So if you want to take a flyer on Dropbox potentially being acquired by a larger company and experiencing the same pop that Slack benefited from when Salesforce acquired it, then this might be a play for you. For me, I like to have multiple avenues for success in my investment and not put all my eggs in the acquisition basket, because if that doesn't materialize, I'm left with a stock that I'm really not that excited about. The second stock on my list is Beyond Meat, ticker symbol BYND. Beyond Meat produces and sells plant-based meat substitutes. So it tastes like meat, but it's not meat. It's made out of plants. Frankly, I think this is a great product that humanity is in desperate need of. Meat production, too much of it that is associated with tremendous harm to the environment, which the planet cannot afford too much of. Products like Beyond Meat help reduce our consumption of meat, which in turn can have a profoundly positive impact on the environment. Now, some important points to point out regarding Beyond Meat's recent performance is that sales of Beyond Meat declined 11% year over year in the third quarter. And this was due to the continued effect of COVID-19 on food service demand. And although the number of players in the plant-based meat space is increasing, Beyond Meat is sustaining or gaining share in the market. Sales of Beyond Meat products declined 34.7% on a year-over-year basis compared to 37.5% decline for the overall category. Now, personally, I don't really care about the decline that's due to Corona. Corona is a temporary thing, and I expect sales to fully recover and then some. The bottom line for me is that you have a company that is in an industry that's growing fast and has new entrants entering this industry all the time. And yet, despite this company continues to gain market share in this rapidly growing industry. According to one report, sales of plant-based meat grew 38% from 2017 to 2019. And a report from UBS projected this rapid growth would continue, getting about 18.5 times bigger to becoming an $85 billion industry by the year 2030. Now, as for Beyond Meat's dealings with interest, just as with Dropbox, they are very limited. Interest income over total revenue is less than 1%, and interest expense over total expense is also close to 1%. So I really like this company. Now the question is, how expensive is it? Currently, Beyond Meat is trading at $140 per share or a $9 billion market cap. Price to sales, given this market cap, is close to 21. Now, with the type of growth that this industry is expected to experience and Beyond Meat's proven ability to gain market share in this growing industry, I expect Beyond Meat is going to do rather well in the coming years. So I think Beyond Meat's valuation is pretty reasonable where it stands right now. Now, I am tempted to get in the Zabiha plant business, and Beyond Meat may be the company that I choose to do this with. However, I haven't made a move yet. I want to experience the product and then compare it with its competitors before I make an investment decision, and perhaps this will be the topic of a future video. By the way, if you're interested in knowing what is currently in the Practical Islamic Finance portfolio, I left a link in the description where you can see the Practical Islamic Finance portfolio and its constituents. And if you'd like to buy stocks in the United States, use the M1 Finance link in the description to support the channel. Alright, now the third halal stock on our list is iRobot, ticker symbol IRBT. iRobot is a technology company that designs and builds consumer robots. The company's products include a range of autonomous home vacuum cleaners like the Roomba, floor moppers like Brava, and other autonomous cleaning devices. I don't think it takes much foresight to realize that tasks which are currently heavily reliant on manual labor are going to be automated, and cleaning is perhaps at the top of this list. iRobot is one of the leaders in automating cleaning. Numbers in iRobot's third quarter 2020 were fantastic. Revenue for the third quarter of 2020 was up 43% compared to the same time last year. Net income was up 162%. Cash on hand was up 300% from a year ago, and the company has no debt. So things are trending in the right direction for iRobot. And I think actually COVID had a positive effect on iRobot's sales because as people sit at home for longer periods of time, they notice the cleanliness of their home more, and they're more inclined to buy products such as what iRobot sells. Now, iRobot does manufacture most of its products in China, which makes me nervous because of what I know of China's horrible treatment of its citizenry, especially Uyghur Muslims. The good news is that since the tariffs between the United States and China, iRobot has been working on moving production outside of China. Specifically, it's been moving its operations to Malaysia, and this move will likely take till the end of 2021. Now, iRobot was exempt from tariffs earlier this year, but they're scheduled to kick in again after December 31st of 2020. So the business may experience some profit headwinds in the 2021 calendar year while it's moving production to Malaysia and it has tariffs on its products. But this may be a fantastic opportunity for investors to scoop up some shares while it's experiencing this speed bump. Now, in terms of valuation, I find iRobot to be very reasonable. They're trading at a market cap of around $2.24 billion at $79 a share and a forward PE of 21. Now, this valuation marks a discount compared to its industry average, forward PE of around 25. Now, of the three stocks that I shared today, I am closest to buying iRobot. And like Beyond Meat, I do want to actually experience the product and compare it with its competitors. If I do end up buying iRobot, I will make a video about it. So make sure to subscribe so that you're notified if that happens. Make sure you don't take anything in this video as personalized investment or financial advice. Do your own due diligence before you make your own investment decisions. Remember to go to halal-investors.com and sign up to be on our waitlist, or if we're live, create an account and become part of our community. If you enjoyed anything in this video, I'd really appreciate a like. Until next time, make sure to take care of yourself. Assalamu alaikum and peace be upon you all.